All right, so for those of you that made it cool, um, low energy today. It's been a long day at work, but today's as I stated earlier in the group, it's not going to be about like finding plays tonight. Not going to be about finding any type of swings or anything like that. So, we've gotten through PPI. We've also gotten through CPI. Of course, tomorrow is going to be job numbers. That's going to be important. So hopefully nobody swung heavy. But the assumption is if job numbers come in decent enough, or as long as I would say, as long as it's not alarmingly low, um, I would say, business as usual, probably going to stay bullish. Charts, at least to me, still look bullish when I look at some of the futures on the daily. Let me go ahead and share my screen. Video panel. Okay. There we go. All right, so just before we jump into any of the trade recaps, just wanted to show this real quick, right? So Dow, Dow on the right, Qs or NQ in the middle, ES or SPY on the left, right? So ES futures, S&P 500, therefore SPY. NQ futures, QQQ, and then the Dow futures, YM, but it's really DIA for Dow, right? So looking at the daily, excuse my charting there. Looking at the daily, still looks, in my opinion, I'm not looking at this current candle because obviously futures still just opened up, but what we are seeing, if I can maximize, the others are pretty similar. So what we are seeing is that we came down and we swept lows, right? So if to help illustrate that, where it's liquidity sweep, voila. All right, came down, swept the lows here, right? I would even say, well, no, not even, nope, not that, but came down, swept lows, came down again, tried the second attempt, but obviously that one failed. So what we are doing is, pushing up, and we pushed up into this fair value gap. Obviously, we invalidated that by displacing above it, right? Not necessarily a strat rule, but I don't know. Lately, I've been seeing like anytime I see like double outside combos, it's usually a pretty explosive move that happens afterwards. And I don't just mean explosive to the upside. That explosion could happen really to the up or to the downside. I've seen it both ways, but bottom line is when I see that double expansion, because that's essentially what an outside bar is strat wise. That's what it symbolizes: aggression, expansion, whatever way you want to look, whatever way you want to look at it. There's usually a pretty decisive move afterwards, and here you can, that's clearly evidenced. We get that push that we're looking for, and along the way we actually create just slightly above this bearish fair value gap here, we kind of create a bullish one on top of that. So get the 2-2 continuation. Obviously, we close below the previous day's close. No, I'm sorry, we closed just slightly above. Sorry, what I'm really trying to say is we closed below the previous day's high. Right, we did close above the previous day's close, but we closed below the previous day's high. So we'll see what tomorrow brings. Maybe a potential, pullback, profit taking pullback, or yeah, we'll get the 2-2 continuation. In my opinion, since we've taken out internal liquidity here, right? We came down, swept external liquidity. So price moves from external liquidity, right? Which was that previous low over there. That was external liquidity being swept. It moves from external range liquidity to internal range liquidity, which is your imbalances, this fair value gap, which is an imbalance. And it, basically violated that. So now it's seeking out the next level of liquidity, which technically should be up here. And that's just based on the NQ. But if we quickly look at ES, probably going to see something pretty similar. So yeah, here we swept liquidity. We swept liquidity. There is our fair value gap, just similar to what we saw on NQ. So price moving from external range liquidity, right? Instead of this being a liquidity run, it's a liquidity sweep. 2 attempts, both ended up being a liquidity sweep. And then we invalidated this bearish fair value gap. So now price should be seeking out the next level of liquidity since it invalidated internal range. Oh, I coded that wrong. My apologies. Since it invalidated the internal range liquidity, then it should, by ICT concept, it should move towards external range liquidity, which should be up here at 5,600. Now, does that mean that's going to happen tomorrow? No. It just means by ICTs, obviously, you still going to watch price action. You still going to trade what you see to be true. But by ICT concept, price moving from external to internal, then to external, that's where we're expecting price to go. Had this fair value gap not been invalidated, then price would have probably ended up moving from external to internal and then back to external. Okay, so that's all price really does, right? My bad, didn't mean to give you that extra one. All right, and if that doesn't make sense, please don't hesitate to ask questions. Can you explain the difference between external range? So external liquidity is going to be essentially your previous swing highs and then also previous swing lows. Now, what the difference is between a liquidity sweep versus a liquidity run is how the candle displaces at that point or closes, right? So if it is a liquidity sweep, right, this is what you see where the candle will violate liquidity. However, it will not displace below it. So in other words, it'll wick below liquidity. However, it will not displace below it. I could get into it a little bit deeper, but what I will do is also recommend certain ICT concepts videos for example, below these like this previous low here, below this previous low are sell stops, right? So in other words, where you have, in other words, sellers who like basically got in at the top here and sold it all the way down, those sell stops are going to trigger for them to get out of, said liquidity, right? So once that happens, what does that leave? It leaves a void, allowing for buying pressure to kick in. And vice versa for up here at the top where we have buy side liquidity, what is above buy side liquidity is going to be your buy stops, right? Again, I'm giving a very shortened explanation of it. I'm doing that intentionally because there are some videos that I feel that I learned from that would probably explain buy and sell stops a little bit better than what I'm currently doing right now. Because if I started to explain it, it'll take a minute, right? But to answer your question, internal range liquidity essentially is just imbalances in the market. That is normally fair value gaps. It can also be gap fills as well too. Let me see. Thank you. It makes sense. Yep. It could be fair value gaps as well too. So for example, your internal range liquidity is going to be this fair value gap here. There's also another internal range liquidity right here, which is this fair value gap here as well too. And again, if you just keep remembering the concept of external range liquidity to internal range liquidity, and that's all price is doing, moving, interchanging between the two, flowing essentially between the two, external to internal, back to external, then I guess it kind of, I want to say makes things a little bit easier, but it'll be easier to understand price movement, price action, and essentially where it's going. At that point, whenever you get price that moves to external range liquidity and then ultimately ends up being a liquidity sweep versus a liquidity run, if it's a sweep, there's more than likely a high probability of reversal back to the other side. Now, how far it goes depends on what happens when it hits internal range liquidity. Okay, so for example, if we use bar replay, I'm going to go ahead and cut. I'll cut from here. All right, so just a quick thing before we get into the trade recaps, right? So here we have at the time, right? That's a previous high. That's your buy side liquidity, right? Obviously, there's also buy side liquidity up here. Down here, you have your sell side liquidity. Let me change that to sell side liquidity, and I'll just put it on the daily, right? And here you have your internal range liquidity. This is your fair value gap, right? So external, external, internal, right? And any other, like, because I'm just starting to get comfortable with sort of going over these concepts. I'm still, I don't want to say relatively new, but I'll say I know the strat a lot better than I do ICT. So if there's any, I guess, pro ICTers listening right now, feel free to jump in, talk about anything. I have no ego when it comes to teaching. So essentially what we're looking for price to do, right? So price came down from buy side, came all the way down, made sell side. So now, as you can see, price is retracing back up to internal range liquidity. Now, one of three things is going to happen. All right. At least the way that I understand it, right? When it approaches the fair value gap, either A is just going to barely touch said fair value gap and then possibly reject and then head back down to external range liquidity, which will be your sell side liquidity here. Okay. And remember, with ICT, it's more about how the candle closes, not necessarily how it opens, where the strat more focuses on how the candle opens, right? So if price comes into the fair value gap or just barely touches it, like what you see with this 2 up right here, and rejects, there's potential for it to come back down to external range liquidity. The other option is for it to hit the CE, aka consequent encroachment, aka the 50% of the fair value gap, and either A, reject off of that, or B, it's going to close either above or below it. All right. To show your middle line when you're drawing just a trading view thing, if for those that don't know, to show the middle line, you're going to use the box tool, right? But when you're done, my bad, I didn't mean to do that. I did not mean to do that. When you are done drawing it out, hit the gear sign and then go to style, and then you can check middle line. That'll show you the 50% of your fair value gap. All right. So again, this real quick. It hits the consequent encroachment, and either A, it may ultimately hit it and then immediately reject out of it while still during the active candle, or it may just close either above or below the consequent encroachment. Now, if that happens, for me, like if it were to, wick off the consequent encroachment, I'm not, ready to jump in a trade. However, that kind of tells me, okay, we might have a little resistance here. And there's in my opinion, a probability that we reject and then continue heading back down. Or if we close above the 50%, there's a good chance that we're probably going to end up violating or invalidating this fair value gap, in which case we will probably head to external range liquidity at the top sides. In other words, buy side liquidity. If it doesn't make sense, please make sure you ask questions. All right. And again, we'll drop some videos in one of the chats. We already have, but we'll probably drop some videos that we've learned from that talk about this. And obviously this video is being recorded to be dropped in as well too. All right. So let's play it out and see what happens. I'm gonna try to make this a little bit faster. So we'll just go here, right? All right, so price rejects off the fair value gap. It doesn't necessarily violate sell side liquidity. However, it does actually, probably give a good opportunity probably to have entered a scalp. This is a daily candle, so probably a scalper probably would have taken as soon as we probably strat wise, at least, as soon as we took out the low of this candle, because this ends up being a 1-2-2 rev strat. I'm going to try to incorporate both concepts. If it gets too confusing, please let me know. But for those of you that studied the strat, this is a combo. 1 followed by a 2 up. So 1, aka an inside candle, aka consolidation, followed by a 2 up, right? And usually when you get those rev strats, the 2 up usually does not close above the high. It doesn't close in force. That's the strat concept. But what I mean when I say in force is it doesn't close above the high of the inside candle. It usually stays, the body of the candle normally stays within the range. And then you get a 2 down, right? So there is your rev strat, your 1, 2 up, 2 down rev strat. Let me stop here because I saw something pop up in the chat. Does the fair value gap hit previous? It can, so yes. So this is a previous low here. That's a good question. So this is a previous low, right? So this fair value gap violates this previous low. And if, for those of you that have been learning ICT from Casper, he actually calls that a BSG. A BSG is a fair value gap that breaks structure to the downside, right? So now we're getting into another ICT concept called market structure shift. And again, I'm hesitant to talk too much about it because like that's a whole video on its own, like a whole entire concept, I think ICT himself goes like 45 minutes on that concept alone. So obviously I'm not trying to cram everything, in one, right? So we'll spread it out. And yes, there is going to be a plan to teach, or talk about market structure shift. The difference between market structure shift and the difference between that and a change in state of delivery. So yeah, but good question. Yes, a fair value gap can violate a previous low or a previous high, and that is considered a BSG, a fair value gap that broke structure to the downside, right? And then Casper even goes one step further, where he talks about one-sided BSGs versus two-sided BSGs. And what that means is, obviously, it takes 3 candles to create a fair value gap, right? First candle, second candle has to displace, in this case, since it's bearish, has to displace below the low of this candle, right? Third candle's high gets created as well too and displaces below the second candle, right? So between the low of the first candle and the high of the third candle, we get an imbalance in the market called a SIBI, right? Which is sell side. Fuck. Give me 1 second. I always fuck that up. My bad. 1 second, 1 second. I'm gonna find it real quick. Hold on, hold on. What does it stand for though? What is the actual wording? Thank you. Okay. SIBI, sell side imbalance, buy side inefficiency. And essentially, AKA bearish fair value gap. But what it means is that a lot of selling pressure inefficiency on the buy side. So in other words, the bulls are weak, hence the displacement to the downside. Did we get some in the chat? My bad. Oh, cool thing. Okay, you're welcome. An abyssy is a buy side imbalance, sell side inefficiency. That's what a BISI is. Okay. So AKA BISI is so BISI, right? BISI is a bullish fair value gap. AKA again, the bulls come in, sell side inefficiency or sell side weakness, bear weakness, whatever way you want to look at it. Bottom line is BISI is a bullish fair value gap. SIBI is a bearish fair value gap. Okay. Right. So again, we get rejection off the fair value gap. We come down to touch. I don't think we really displace. Let me see. Sell side is at 432. Let me see. Where did we get to? Just barely. Well, not just barely. I'm sorry. What I mean when I say just barely, like we just came down. We didn't really violate sell side liquidity, right? So let's see what happens next. And then we get a reversal right back up into, so here's your retest, right? So here was your first test of the fair value gap, first test of the internal range liquidity. Here's your second test. We get a little bit further this time. However, where do we close, right? We filled the gap, but we ended up closing below the consequent encroachment. And I didn't go through this before, so I mean, we could very well keep pushing up, but if we close below the consequent encroachment, to me, even though I'm not married to it, my bias would be is that we're probably going to fail and continue heading down, considering that we could not displace above the consequent encroachment of the fair value gap. And as you can see, second attempt to displace above the internal range liquidity, aka fair value gap, and it failed, so much so that we displaced entirely outside of the fair value gap, right? So again, what is price doing? Moving from external range liquidity to internal range liquidity. And if ICT concept is correct, we're going to come back and try to attempt sell side liquidity. I don't know if it's going to be the next, on the next candle. So on the next candle, we completely violate sell side liquidity. This is called a liquidity run, not a liquidity sweep, because we displaced below sell side liquidity. Let's see what, we gone, right? We created another, it's gone. Came back down to, so what happened here is, right, price violated external range liquidity. So now, again, it's going to seek out other liquidity, right? So again, look back to the left. It took out liquidity here, took out previous lows there, and then came down and took out this previous low as well too. These ended up being runs because again, price displaced below, but this one ended up being a sweep because price, yes, violated it. However, it displaced above sell side liquidity here. So that's why I categorize it as a liquidity sweep, not a liquidity run. If you get a liquidity run, more than likely price is probably going to continue in that direction. Evidenced here by this candle, we get a liquidity run. What does the next candle do? Evidenced over here as well too. You get buy side liquidity here. We get displacement above, liquidity run. What did price continue doing? On the flip side, if you get a liquidity sweep, more than likely or probably price is going to reverse. Evidenced here. Right? You get it. I mean, nobody's saying that it can't be retested, which is exactly what happened here. There's a retest, yes, but second retest, the retest ended up being a sweep as well too, right? So clearly that should tell you at that point, there's clearly support and buying pressure here, right? And therefore we get the reversal back to the upside. And then we actually end up with the inversion fair value gap scenario. However, that will be for another class. Does that make sense? Or is there anybody lost or anything like that? Like for real, this ain't a lecture. Please, if you have questions, take yourself off mute. Yeah.
So I got a question
Yeah.
on. So how do you know which, I guess, which sell side liquidity is stronger? Because it went through those other ones, like it just blasted right through, but it stopped at this one at the bottom. So how do you know like which one is the strongest or the, I guess, has most support? If that makes sense.
Yeah, I get you. So for me, it's going to be about, I know I'm currently looking only at the daily, but for me, it's going to be about the higher time frames. I believe this low here, if I'm not mistaken, is also a previous low sell side liquidity on a weekly. And I think it may also be on the month too. Nope, I was wrong. My bad. But higher time frames, right? So the higher time frames, and this is the same concept for this is where I would say ICT and Strat agree. Higher time frames normally win out, right? So if you have a level of sell side or buy side liquidity on a higher time frame, you're more than likely going to see it respected on a lower one. Does that help?
Yep.
Okay, cool. Um, oh, Roddy said it makes okay. I thought I had another question. But other than that, if like let's say I'm only focusing on this one, unless somebody has a better, unless another ICT person has a better answer, I honestly just watch how the candle closes. I know that requires patience, but I'm just going to watch how the candle closes. Close. So when I see the first liquidity run here, I'm not even remotely thinking about a possible reversal, right? Because again, we got that liquidity run here. So I know based on what I've learned from ICT, we're gonna probably continue down in that direction. So I'll wait to see not what this candle does, but I'm gonna wait to see what the next one does and how far it wants to go. And in this situation, again, it came down and swept liquidity. But keeping it a stack, because I'm not really in the habit of jumping in immediately, I also know that price is probably going to end up retesting. That's not always going to be true, but I'm okay with waiting for the retest. And, in this case, that's exactly what it did. I waited for that. If I were to catch this move on this retest, that's probably where, probably on the close of this candle, you'll probably see me entering that plus the double outside combination for the strat as well too. So once, either you could take a strat entry and wait until this thing goes two up and takes out the three, right? Goes in force, and then you can use that as an entry. Or if you want to do by ICT entry, that would mean waiting until waiting until like as the candle closes, that's when you would use that as your entry for the next move up. Okay. So yeah, but this one actually, I'll probably try to save this example because this example also shows a really good inversion fair value gap scenario um to the bullish side, so yeah, we'll talk about that. But all right. So if there's no questions about just that little exercise, let's move over to some of the tickers that we talked about on Sunday. The first one that we're going to talk about is Netflix. So with Netflix, I'm going to first chart it out strat-wise. As you can see, you're not seeing any fair value gap indicators or anything like that. So just kind of, again, I want to cater to both sides. I know there's certain people learning the strat. I know there's also certain people learning ICT as well too. So I'll try to rewind and go back through it, showing the ICT indicators, and then we'll go from there. Okay. However, with Netflix, right? Why did we talk about Netflix? One, because we saw what was going on with XLC. XLC, the sector, communication sector, was looking rather bullish on multiple different time frames. So when we see that, that should instantly tell us, hey, let's go check Netflix, let's go check Meta, let's go check Disney, let's go check Google. Hell, even the small account friendly tickers like T, which is AT&T, Verizon as well too. I know some people play Charter. I personally don't, not for any reason. I just really don't see a need to. I did just say Verizon as well. Okay, so how would we chart this out strat wise, right? So for me, the first thing I'm going to do is establish my range. Okay. Now you can, if you're good with drawing broadening formations on your own, that's fine. But if you're not good with drawing broadening formations, you can use this indicator called inducement/stop hunt. Okay. And if you only want to see it, the reason why we're using this, I didn't explain that part. The reason why we're using this indicator is because it will show you swing highs and swing lows, evidenced by the blue dots that you're seeing. Okay. Dot there, dot there, dot there, dot there, dot there. And what is a swing high? Well, a swing high is when you're looking, actually that three, well, the three is a good example. If you have a candle, right, and either candle on each side of it, the highs of those candles do not displace above or go in force above or violate this previous high or this high, then it becomes a swing high, right? And usually you'll see a change of direction when you get a swing high, right? So like, so for example, here we get a swing high.
I'm having trouble connecting to the internet. Check your Wi-Fi network connection by going to settings.
Yo, my tablet be going crazy. What the hell? Why? I'll fix it later. That's so weird. Yo, Amazon, I swear, be doing some weird ass shit, yo. The tablet's been sitting there quiet all night, and now all of a sudden it can't connect to the internet. But hold up, let me make sure like nothing happened. Nope, Wi-Fi is good. Okay. If y'all, if we cut out or whatever, I don't know what's maybe something's going on with Comcast, but if we do cut out, then obviously I'll send out another link, but maybe it's just a tablet. Yeah, no, I'm good. Okay, yeah, I'm good. Okay. Where was I? So yeah, swing high, right? So obviously, like for example here, right? You get a run up, you get a swing high, right? Neither of the candles highs are above this high, then you get a reversal, right? Back to the downside. Swing low, same thing, right? Trending down from this two up, you're trending down, you get a swing low, you get a nice little reversal. Obviously, the reversal doesn't have to be major swings. Sometimes it could just be a couple candles and then it, then it comes back into the trend that it was moving to begin with. All right, so inducement stop hunts, if you add that indicator to your trading view, and how do you see just the swing highs and the swing lows? You're going to click on this gear sign and only check show fractal highs and lows. That's it. Don't worry about nothing else. Don't worry about any of this other stuff. Just check this. That's it. And then press OK. Blue dot show. And what you can do now is use that to draw your broadening formations. We go from for the bottom side, we go from a low back to a previous swing low. And then for the top side, we go from a high back to a previous swing high. So from one swing high back to a previous swing high. When you are done, it should look like a megaphone to the right-hand side. It should be broadening out to the right-hand side because price is showing expansion, right? Oh, we can draw from there, right? Actually, that's the high too, and then boom from there and then up, right? So that's the idea. That's a little shitty looking, but yeah, there we go. Right? So essentially, again, higher highs, lower lows, higher highs, and then yeah, probably come down to lower lows, and then that's the idea of making that broad information because strat concept says broad information is nothing but a series of higher highs and lower lows. Let me pause here, make sure there's no, okay, good. All right. So we have established our range with the broadening formation. So we are coming from the lows. We're not quite at the lows, but we are coming from the lows, right? And as we can see, we have a lot of room to the upside. Now we can start marking out our entries and also our targets. Strat talks about being prepared and not having a bias for anything. In other words, we trade what we know to be true, and we have a game plan for whatever way price wants to go. So we come over to, you can, change your templates whatever way you want, but I have a template for daily entries. So that's my daily entry to the upside. And then I'm going to mark out my targets to the upside. Oh, my bad. Did not mean to do that. Right there. Okay, now we need a new one. So if price were to trigger my call entry, which would be triggering above 636.62, what would my targets be? Well, my target would be the very next previous high. That would be my first target, but we call them magnitudes, right? But you can call it a target, whatever way, completely fine. Whatever terminology helps you best. And then I'm going to choose the next high. That would be my second target. Now you can lace as many targets as you want, right? I mean, hell, I could go all the way up here if I wanted to. Normally what I do is as price takes out targets and closes above targets, I just move the magnitudes, back further up along the lines. But the reason why I'm stopping at 2, because that's usually where I use to pick out my contract, right? My contract's not going to be my entry, so I'm not going to choose like a 635 call or 637 call. I'm going to choose a contract that's out the money, but within a reasonable target, like 650, right? Why 650 a reasonable target? Because we're dealing with a ticker whose ATR is round up $19 a day, right? So it is not unrealistic to think that Netflix can get to 650 by the end of the week, or for me who likes time, by the end of 2 weeks. I hope that's making sense so far. If it's not, again, please don't hesitate to ask questions. Now, done with the top side, I'm going to go ahead and start marking out the bottom. Like, okay, well, Tensho, what happens if it reverses on me? Or if I have a bullish bias, but all of a sudden Netflix wants to drop? Who knows? Maybe some news came out. So we have a game plan for the downside as well, too. So if price triggers the low of this candle and gets below 622.99, right, then we know that we can take those puts, and then again we mark out what our next targets are going to be. So technically your next target is going to be the next previous low, which is this candle here, 616.02, and then the next target after that is going to be 610. I'm probably going to draw one more target. I know I said I normally do 2, but just simply because Netflix has a very high ATR, so it's quite possible that if we do trigger 622, you're probably going to hit 616 and 610 in probably in that same day, right? Because that's only a well, no, because we're starting at 636. Never mind. My apologies. I'm starting from where the entry would be, but no, technically, if price were to drop, it would be dropping from 633. So it's still possible to get down to 610, but I'm still, because again, it's a high ATR, I'm still going to mark out that third one anyway, right? So for me, as far as choosing a contract to the downside, again, we want to be realistic. I would probably choose something in between the 610 and the 600. Right? Because whether it be a weekly or 2 weeks out, it's still within a range that's not unrealistic for it to hit, right? To go from 633 to, let's say, 610, that's only a $23 move, right? Considering this is a stock that moves on average $20 a day, obviously it's not $20 up or $20 down. It's not unrealistic to think that Netflix would be less than 610 in a 5-day trading week. All right, so now I have everything marked out, and at this point, you just execute, right? So let's see what happens. Now, before I continue, we talked about Netflix on Sunday. Our bias was bullish. Okay. I believe I talked about the 650 call. I would have to go back and look at the video because I didn't write it down. But if anybody watched the video, I believe what I said was the 650 call. Right. So let's see what happens. Again, trigger, it would have been 636.62. So let's see what happens. So we get the trigger, but we didn't go in force, right? So, however, let's talk this trade through. Actually, did that complete it? Okay, yeah, it does. My bad. All right, so come back, select bar. Okay. Just wanted to make sure it did the whole day and it wasn't like a update of just part of the day. So Netflix triggers to the upside, right? Let's say you got in and you took that trigger, okay? Because StratWise says once it hits, you know, you can either take it or you don't have to be the first one in. You can wait to see if it retests. So we waited for it to retest. Cool, that's fine. All you would do is just move your entry, right? That's all you would do if you didn't take the trigger. But let's say you did take the trigger, okay? Tensho, I took the trigger and then it pulled back on me, right? This is where your mental gets fucked up, okay? It pulled back on me, so I exited the trade. Why? If you have a percentage stop loss, okay, fine. However, if you're looking to swing this, right? For me, this is how I play swings. If I take the call entry, at that point, my stop loss then becomes the put entry. So as you can see, this candle never hits my put entry. Now, does that mean potentially a little bit of a bigger loss? Yeah, it does. So I don't really play. That's why I say I don't really play percentages when I'm swinging, which is the reason why I like giving time. So one, theta doesn't F me up. And two, I'll give it time to work itself out, right? But all in all, it's still a bullish candle. It just didn't go in force. You still got a 2 up. It just didn't go in force, right? FTC is still majority in your favor. So for me, looking at that, I'm not thinking to exit the trade. I get it. Nobody likes seeing red on their contracts. So I get it. That's fine. Let me stop here for a second. Yeah, I'm sorry. I didn't see the chat. You got the 655 on Monday. Okay. Yes, and I get it. First day was a wild ride, right? It triggered 636 and then it pulled back. So I totally get that. Did it not go in force because yes, it did not go in force because it did not close above the previous candle's high, right? Here. Would there be an issue? Nope. No, Doc, that's not an issue whatsoever. I know some traders that do that. And what Doc is asking is, let me just illustrate it real quick. Some strat traders will use the 50% of the candle. So once it violates the 50% of the candle, they'll exit the trade. All right. Now, for me, I'm going to take that one step further. Even though I don't use the 50, what I would look for is to see if the candle's going to close below that 50. If it just touches it and bounces off of it, honestly, Doc, I'm probably still in that swing because you know me, I give time. So I'm not going to, yes, the contract's going to be a little bit more expensive, but again, I'm paying for that time. All right. But yeah, absolutely. You can use the 50% as a stop loss. Yes, you can. And Whitney, to answer, does that make sense? Right? Because it did not close above this candle's previous high, it's not in force. However, I don't want y'all to automatically think when a candle doesn't close in force that it automatically means we're going to get a reversal, which is why it's so important to pay attention to the actionable signals. Can y'all give me just a second? Let me take a sip here real quick. I feel myself wanting to cough. Hold on. Okay. All right, my bad. Okay. Where was I? All right. So it did not, again, it didn't go in force, but it's still a 2-up, right? So this is where, again, I know it can seem like information, or analysis paralysis, right? But these are kind of the checklists that I go through personally when I'm looking at a swing like this, right? Yes. Did I enter the trade once it got up above 636? Yes. Did it pull back on me? Yes. Did it end green? Yes. Is it still a 2-up? Yes. Is the full time frame continuity in my favor? Yes. Right. And then I'm probably going to check the weekly just to make sure like it's still looking legit. Oh, I'm probably going to check the weekly to make sure it's still looking legit. Although honestly, the weekly's probably it's Monday, so the weekly's probably showing me the same exact thing. Okay. But anyway, I'm willing to take that calculated risk to see what happens with the next candle. So let's see. Next candle triggers not only, so let's say you didn't take that initial trigger, right? And let's say you waited. So then your trigger, for those who would have waited, your trigger would have been above 639. And again, your 650 probably would have been a little bit more expensive, but doesn't matter. You still made money, right? Obviously not as much as you entered down here, but you still made money. Okay. So for those who got in immediately though, and waited and didn't close out the trade, now you see that on the very next day, Tuesday, you take out target 1 and target 2, right? You close in between the two, but you take out target 1 and target 2. You hit that 649.58. At that point, I don't know the percentage, but your contract should be green. And at that point, especially if you have multiple cons, you should be closing or reducing your position. If you didn't do that, you deserve, if it reverses on you, you deserve to lose your money. Does that make sense? Hope so. If there are any questions, again, please don't hesitate. Right. So then for me, I probably would have continued to swing, probably again, reduce position. Because again, we closed 2-up, we closed in force, full time frame continuity still in my favor. Yeah, by all intents and purposes, I would say we're still bullish. So let's see what happens. And then boom. I'm sorry, I did forget to say one thing. My apologies. Hold on. One last thing that I would have done, right? So since we took out and I forgot to, come on. Why are you not cutting it? 1 second. There we go. Okay. So since we took out this target but didn't displace above this one, then I'll go ahead and walk my next target up. So my next target would be 652.42. And if I'm confident, I'll probably walk this one up too, up to 656.29. So again, you have ideas of, instead of watching the contract run up percentage-wise, and oh my God, I'm up 300%, walk your targets up, right? And then it gives you a clear-cut map on, okay, if it hits this tomorrow, I'm going to reduce a little bit more. Or if I think it'll hit both, right? Because again, Netflix moves pretty fast, right? Then I would say, okay, if it definitely clears this one, I'm probably going to reduce my position. Okay. So again, let's see what, obviously we know what happens. Today, we get the run up. And again, both targets get taken out. So what was that? A total of 4 targets? This one, that one, 1, 2, 3. Yeah. So 4 targets get taken out. And at this point, you should be down to a runner, because I probably would not want to try to hold through full position to get through, to get through this, to get to the top of this 3. Okay. More than likely, you're probably going to see maybe some sort of a pullback along the way. But does that make sense? Like walking through that trade? If there's any questions, ask now. If not, I'm gonna move to meta. Okay, I'll take that as a no. All right, so let's go to meta. And we go and practice the same thing. Practice makes perfect, yeah? So first thing that we're gonna do is establish our range, right? So I'm actually gonna start from, instead of starting from this swing low, I could draw from there to there. I would rather take this one, honestly. Um, it'll just be cleaner in my opinion, right? Because also this previous swing low respects as well too. Now, as far as to the upside, there are actually two broadening formations that I see. The first one is going to be from this swing high back to this swing high. Or if you're, I think on the higher time frames, meta was looking bullish. So I believe I originally drew from this swing high to that swing high. Because my belief was this swing high would eventually be violated as price begins to move up. So for me, I'm gonna draw my broadening formations here. Okay. 1 second. Okay. So now what's my next move? Let's start establishing our entries, and then let's start establishing our magnitudes. Okay. So first thing here, this is my call entry. So above 518.34, we go into calls, and then my first target or magnitude is going to be here, this previous swing high at 527.17. And then my next target is going to be up here at 535.46. So if meta triggers to the upside, then I know that I'm probably going to be looking at either the 530 call, or if I'm feeling froggy, I might go with the 535 or possibly the 540. Again, if I'm feeling froggy, because meta moves $20 a day on average. So we know it's a fast mover. Okay. Now, what if it moves to the downside? My entry is going to be here, right, at 505.70. And then my targets are going to be this low here at 494.72. And then this low here at 486. Oops, sorry about that. I forgot to code that. 486.86. Okay. Now, what are some other things we want to take into consideration? Yes, we do want to look at the higher time frames as well, like see what the weekly is doing, see what the monthly is doing. But just based on this alone, you know that full time frame continuity is in bullish favor. I am going to add the caveat, like I always do, don't be completely married to your bias that is all that you can see. I still want you to get in the habit, especially you beginners that are learning the strat. I still want you to get in the habit of charting for both ways, so you have a game plan for both ways. Okay. Hold on. Let me see what we got in chat. So I'm going to answer that two ways. If I am scalping, as soon as it breaks the call or the put entry, I'm taking the trade. If I am swinging, because with swinging, I have the luxury of time. I can wait to see if it, so like what I'll do is see if it breaks the call side, right? Call side entry on the daily, then what I'll do is maybe zoom into like the hourly and see if it comes back to retest that daily entry. And then, if it does and then it bounces off of that, then I'll take that entry. Does that make sense? Okay, cool. All right. Okay, so let's play it out, right? Let's see what happens. What happens on day one. So on day one, we just end up inside, right? Nothing doing. But strat-wise, this is an actionable signal. So If anything, all I'm probably doing is just taking, excuse me, let me just make sure of something. Okay, yeah, all right, just wanted to. Okay, so strat wise, all I'm doing is just moving my entries, right? So instead of my entry being 518.34 to the call side, it's now 518.02. And then to the put side, instead of it being, what was it, 505, it's now 509. Okay. I'm not really going to change my targets because, again, if I'm swinging this, even on a weekly, right? If I plan to hold this over the next couple of days, then I'm probably going to keep with the same targets, right? So let's see what happens. All right, so on this one, we started out gapping up, right, into Wednesday, but good thing that you asked that question that you did, Antoine. What did price do? It came back to retest that entry. So when you have a gap up, you could have immediately tried to enter it, right? Or you can wait to see if it's going to try to close the gap, which, it pretty much did. Or you could just not touch it at all. In this case, it came back to the entry, to the call entry. So even if you got in here, yeah, you probably would have been red for a little bit, but you finished the day green. Or if, again, you wait till it comes down to 518, you go ahead and take that trigger. Now, me personally, I would have probably taken the 530 call. Yes, it would have been more expensive. But considering my first target is 527, that's probably the call that I personally would have taken. You could have probably also gotten away with the 535s as well too, right? So don't think like, oh, that, oh man, I would have gotten the 535s. Like, that's crazy. I should have gotten 530s. It's fine, right? So first day, right, we get from 518, we move $10 up to what? We get to a high. I'm not $10. I'm sorry. My apologies. We move about $13 up to the highs of 531. So technically, in your first day, if you got the 530 call, this would have been an amazing trade, and you probably could have exited the trade and be done with it. It would have just been a day trade, call it a day, done. The point is not to swing for home runs. The point is just to grow your portfolio, right? If you would have gotten multiple contracts, reduce position, leave runners. But let's say you got greedy and held. Let's see what happens. You get a 2 up. What is this, Wednesday? Yeah. So the beginning of your day would have been great though, right? Because you got all the way up to 533. And at that point, yeah, I definitely would have, I definitely would have taken profit. Right. But I'm showing this because it's not like how Netflix was. Netflix took out multiple targets. Meta only took out one. It attempted the other one, and who knows, tomorrow it may do it, but I'm not willing, for me personally, I wouldn't be willing to gamble with that. This is why having your targets marked out is so important, right? You take the 530, you could have gotten out, and then, or on this in today, when you started seeing it pull back, especially once it got back below Tuesday's previous high, Tuesday's high, yeah, you probably should have exited at that point. Because this is how people get effed up. They hold thinking like, well, it's still a 2 up and it's bearish. But then if it starts reversing, coming back down, you end up taking an L instead of taking a win. You can always re-enter, right? And it's not about leaving money on the table. That's such a FOMO concept, in my opinion. Because all it makes you do is do stupid stuff the next time around. All right. So yeah, Meta still turned out to be a good win. All right. Let's exit that. Any questions on that? All right, last one. Snow, but this one I'm going to add in any, if any, ICT concepts. I'm going to show the ICT indicators. So two ICT indicators that I work with. Super order block, FVGs, but honestly, there's a lot that I have taken off. Like I don't have it show me the order blocks because I can identify them at this point. Excuse me. And really, I can identify the fair value gaps. I just don't, I get lazy. I don't feel like drawing them every single time. So I leave it open. And then I think I don't really F with anything like rejection blocks. That's a whole nother concept as well, too. Yeah, you can even plot out breakup structure. So like if you need help with understanding market structure shift, that's one, this will show. Anyway, we'll talk more about this indicator, right? But for right now, I just use it for mainly fair value gaps. Breaker blocks, and again, that's a whole nother concept, which again, we can talk about. Actually, Sal really trades pretty well on the unicorn model, so maybe I can convince him to like go through a class on breaker blocks with y'all, and then especially with unicorn models, because that in itself. So the thing with ICT is a lot of concepts, but there are different setups that you can choose. Like some people will choose to trade inversion fair value gaps. Some people will trade unicorn models, and like the setups are all equally effective. It's just you have to find which setup works best for you, right? Some people use mitigation block theory, some people use rejection block theory, order block theory, etc. And that's why, again, I'm hesitant to really start talking about it because, like, we could potentially be here all night, really.
Realistically, I think that learning like liquidity, which I say draw on liquidity, market structure, and sell side, buy side is most important first. It's not good to go through all of this and try to put this together at one time. It takes time. You learn these things in steps as far as the ICT models and different things of this nature. The unicorn model, I do use it a whole bunch. And I've added different concepts and different things that I do. Don't think that I'm too far advanced. I've just put a lot of studying in what I already do. I did not start with the strat, and before that was using the 9, 10, 21 EMAs, which a lot of people talk crap about, but I use it, with my charting, with my trading. So I think initially the best thing is to learn market structure, like change of character and break of structure. And I can put some videos and diagrams or graphs for you all to learn, what you, sorry about that, I apologize.
No, you
But,
good.
that you can get a better understanding from it. I can teach you all, do classes on the unicorn model. But I think, if you don't know ICT, I don't think that it would be useful for you. I'll try to do a class either Saturday or Sunday or something. That's what I plan to implement more so. But what I do need you all to do is start speaking up on what you understand and what you don't understand. Be more active, even, and for heaven's sake, if you are trading and trying to learn, simply paper trade. I'd rather you learn and take the losses from paper versus, y'all just randomly taking plays and different things of this nature.
Yep, I would agree 100%. What we saw, so Snow, I'm choosing to talk more ICT because
Another thing with that, now this is strat stuff. I don't know if y'all familiar with fail 2 ups and fail 2 downs. Those, in my opinion, is just like, it's like a holy grail type of trade. It's like a trade which, like 80% of hidden a probability. You know, gap plays as well. You know, gap fill type of plays because usually if they don't have like a lot of volume or just speed to the candles, those will hit the gap fills and come and go back the other way. You know, you can literally, search for gaps on any chart, and that would be a play. You know, simply when it hits the gap. Now, don't just automatically think it'll do that. Wait until it hits the gap and it comes back down.
Wait till you get
Another,
confirmation.
yeah. Another key thing, what I see a lot of people doing is with bias and things of this nature. You have to wait for this candle to close, sort of to confirm your theories or your bias with everything.
Yep. And that's really important, right? You don't want to, you want to see, how the candle closes, before you decide to like completely jump into things. I can't tell you how many times personally my trades have gotten messed up for that reason alone, like jumping in immediately and, not seeing like how it's going to, because it could start off super green, but then turn red, end up being a shooter and stuff like that. This is gonna be the last one of the night because we're almost at time. So snow was more about ICT and what I saw in it. On the weekly, I believe. No, there was nothing. No, actually, I could have sworn, or was it the monthly? Ah, okay. So on the monthly, right? Liquidity sweep. Obviously, this isn't closed yet, but I mean, with the way it was being bought back up, I know I just said wait for the candle to close, but the monthly takes forever. So far, liquidity sweep on the monthly, right? Weekly, I see a huge green candle, right? Came down, immediately gets bought up, right? So, all right, I'm thinking at this point, maybe we get a bounce on snow, right? I'm not going to say it's the most perfect setup, but maybe we get a bounce on snow. Then I look at snow here. I see the drop here. I see the fair value gap that gets created. And actually, if I'm not mistaken, this ends up being an inversion fair value gap scenario. You get a bearish fair value gap created. However, price ends up invalidating it on the way back up, evidenced by this 2-up candle. This is where we finally get displacement outside of that first fair value gap. Yes, I'm aware of this fair value gap here, right? I will explain what these are later, but for me, when I see a fair value gap that broke structure previously, so in other words, the bearish fair value gap here that broke structure, I'm more so paying attention to what it does around that previous low, aka an inflection point. Okay. So, oh, sorry, 1 second. I thought I had bar rewind on. My apologies.
Before you continue, something that I had messaged him, I think this was last week. Those lower lows, the lower highs and stuff, when those basically ICT terms, basically what you're doing is sweeping liquidity. That next candle, that next candle close, and then you can get in on that play. But that's more or less like when you're scalping. I don't know how many of you are in here that are scalping, but that's something that I literally just noticed, and of course I understand the ICT, but it's just like whatever it is, those low lows, like when that after that candle, you can get, like you're targeting the next high or something of that nature.
Actually,
And that's what when Charles be talking about premium and discount, that's exactly what it is. It's just used in with different lingo.
I actually think I have a perfect example of that. Let's see.
Um, do you any of you all have any questions about that at all?
I think I have a perfect example of that. Okay, yeah, so what Sal's talking about with sweeping liquidity, right? So boom, here we are. This is Wednesday, 10 o'clock hour, right? I don't like trading within the first half an hour. I know other scalpers do. I'm not saying it's a bad thing. I just don't like trading within the first half an hour, right? So looking back today, earlier today at 10 o'clock, right? I see what the hour's doing. This is a sweep on liquidity, right? So we have sell side liquidity here. Where's my sell side? Sell side liquidity here, and then you can put buy side up here, right? Buy side liquidity up here, right? Because we took out this previous buy side liquidity, created a higher high, is buy side liquidity, right? So then what you can do, right? Because again, you see that we're sweeping liquidity here, then what you can probably do is zoom in on a smaller time frame. All right, where's 10 o'clock? 10 o'clock here, right? Well, actually, probably none of these candles, but once you get to this candle, right? Once this candle closes, because this candle ends up sweeping, right? Overall, the hour candle sweeps liquidity here, but this candle ends up sweeping that liquidity on the 15 minutes as well, too, right? And it probably also helps that price dipped into a unicorn model, which again, I'll just explain quickly what it is. Break your block with a fair value gap inside of it. But we'll talk more in depth about that later on. But anyway, price comes down, sweeps liquidity. We're going to just focus on the liquidity part. Price comes down, sweeps liquidity. And then what Sal is talking about, because it's a liquidity sweep, you're more than likely going to get a reversal back to the other side. And that's what you get here on the 15-minute. Liquidity sweep, closes, you get a 2-2 reversal back to the other side. So what you could do at that point is target, if you're jumping in on the 15, you can target the hourly buy side liquidity if you want it, or if you wanted to, target, technically you have a fair value gap here, so you could target internal range liquidity, completely entirely up to you, right? How does that translate to the Qs? Give me just a second. Go here. SPY. No, Q, my bad. What was it? The 65, and then come here. This is 1030. I need to change it to voila. All right, so come in. This is 9:30 heading into the 10:30. So liquidity sweep would have been around, according, like, I'm watching NQ, but I'm also focusing on what QQ is doing, right? So I see that the liquidity sweep takes out the lows, fall back into a fair value gap here, right? Let me mark that out, boom, and then also mark that out, right? So, all right, come back into the 15-minute. So on the 15-minute, this is the low of that first hour. And then again, similar, right? Similar to what we're seeing on NQ, right? We see that this candle ends up taking out liquidity, right? There's your 15-minute liquidity right there. It ends up taking out liquidity, ends up closing above. So again, it's a liquidity sweep. And what Sal is saying again, you take that either the close here, or you can take the open, or you could take a strat entry, whatever, right? And then your target would be buy side liquidity up here, right? Because again, remember the concept, price is moving from external range liquidity to internal range liquidity. And since we have no internal range liquidity here, right? Price is going to seek out external range liquidity up here, which is exactly what it did. So this ends up being your entry.
Tensho,
Uh,
pull up pivot points standard, that indicator. put that and put
Pull
that
up.
in
I'm sorry.
pivot
Say it again.
pivot points standard
Pivot.
and go on the 5 minute on QQQ or Spire, and you'll see exactly why I said put your the thing, go through the settings and mark date. Oh well, I think you could put it for auto.
It says traditional auto. That's right.
Yeah, you'll see exactly why I said once it took puts, and you'll see it bounce off of that lower pivot. Look at the bottom right there.
There, right here.
Exactly. And if you go to the top was the
Oh, and then it hits all the way up there. Oh, so you're using that as okay. That's nice. I like that. That's pretty nice.
and in my opinion, that is, if you have problems finding support and resistance, that right there
We'll show you.
will exactly.
I like it. Because as a matter of fact, on the 15, my target, I mean, my entry is up here, but I could have taken down at 459 and ran that up to 465. That would have been a really nice ass scalp, actually.
Now I know a lot of people don't talk about that, but that's something that I do use quite a bit as well. Like when I have problems or when I'm looking at multiple screens or just have multiple stuff, going on, I think that would help like a lot of people out,
So
especially if they're intermediate or beginning type of trader.
I'm sorry, guys. I missed, my eyes just turned briefly. Right. I think me and somebody else had the same question. What indicator is that again? And what's the setting on that indicator?
yeah,
to get us?
got you.
Pivot.
So indicator is
Tensho, write it in the chat, please.
pivot point standard. So give me 1 second. Pivot points standard. And then he said, make sure it's set to auto, which all
Yeah,
I did is
because
I added it and it was automatically on auto, y'all. So it shouldn't be too much changing that you need to.
I'd rather it's set to that because now I've seen people use, how will I say this, for the daily, for the weekly, and the monthly, because those do matter as well. But I don't think those should be important to you all, not right now. But as y'all, get used to it, you can, use 3 of them up there at one time.
Shit, you could have actually taken 2 plays. The calls up to 465 and then the puts right back down. You could have grabbed
Exactly.
160 puts.
Look,
and yeah.
Seriously.
Wow.
So it's something, I do sometimes. It's like I'm playing QQQ call, like it's in the downtrend, but once it reaches that support, I'm playing pivot to pivot, literally. And that's how I can go out of the money with it.
That's nice.
Because think about it, if you get it right there at that bottom, and then look at that top, look how and you basically can get in that play for a lot cheaper versus the $100 type of cons I'll be getting.
Yeah, $7 move from 458 all the way up to 465. Damn, that's nice.
Seriously. So you get, I'll say realistically for anyone of you, you throw 50 cons on a play like that, your day is made, literally.
One trade, one shot, one kill, done.
But you have to be patient. One thing as a trader, yes, I take a lot of, opening bell scalps from, the first, second, or third candle. But let's be realistic. Everyone can't do that. And this isn't bragging on nothing. It's just my skill, where my skill level is at. But if you can keep on doing this over periods of time, you can absolutely do the same thing as well.
Yeah.
You also have to take profits quickly sometimes. And you sell in strength. And why I say sell in strength, because say like, you still in this play when it hit that top pivot and it's coming down. And if you're trying to sell, it's not gonna sell soon. it's going to take a little time, especially with the amount of contracts that are being.
Yeah. So it's kind of like your rocket taking off out of the atmosphere, how those pieces fall off while it's heading up and not while it's heading down. So and yeah, that's I gotta say, as I'm learning more about scalping, I'm learning that it's not like how in a swing trade where you could just say, hey, let me exit, and eventually that exits, it's gonna kick in um on the fall down. But no, when you're scalping,
And look,
you gotta take
I've
it all
been
the
in
way up.
I've been in trades where you can be up 8, 9 grand, and by the time it sells, because I'm being greedy, it'll fall down to 6 grand. You know?
The author pivot point standard. Um, I don't know. I don't see an author. Nope. Let's try pivot. You said a lot of them popped up though? Because there's only one popping up for me under technicals.
Yeah, that's what it is. I just did a general search, but when I went to technicals, only one
Okay,
came
all
up.
right, cool. All right. So you good. Okay, cool. Okay. Yeah, so yeah, okay, so again, we're gonna probably stop here because we're not trying to cram everything in one class, right? So we'll have some other things that we talk about in other classes. We're gonna try to make it more class, not necessarily like looking for lottos. Oh,
What I do want y'all in here to do though, literally message me or Tensho rather about the type of classes y'all want. I'm writing quite a bit of different classes that I can do for you all in order to enable y'all to win more and kick ass in the market. Some of you all don't say anything though. I mean, if we don't know what you all need help with, it's impossible to, put y'all in position to win.
right. And yeah, the topics, we're trying to make them 30, 45 minutes. So, we understand, we all got lives here and a lot of us got kids. So it's not going to be like what it is tonight, like an hour and a half. But yeah, if you give us some topics, I mean, we'll also even talk about, could even be on indicators too. Like you do a quick 15-minute class, like this is an indicator, this is, the indicator that I use, like these are like the different things you can turn on and, just things like that, um, which will go a long way. And then any of these sessions will be put in either education channel or the Tensho weekly Zoom. Tonight's will be put in the education channel. Actually, no, because no, we more recap. So yeah, recaps will probably more go in the Tensho weekly Zoom, but I will tag everyone so you know exactly where it is and you can watch it again and again. But we're gonna close here. Right, Sal got to go get his rest for one. A lot of y'all is late as well too, and believe it or not, I actually still have a little bit of work to do for the main job. So we're gonna close here. I hope that I really do hope that this was like helpful and like there's more of an understanding, especially when it comes to like charting out, because I know that's one of the main things. Like, how do you chart out your plays? So, um, I know I didn't really touch on the charting for ICT, but I'll get to that. I didn't forget. We just got, kind of sidetracked with the scalping thing, but don't worry, we'll get to that, like what I look for ICT and then we'll go from there. All right, y'all. Love, peace, and chicken grease. This thing probably gonna take a little bit to convert. So if anything, I'll probably put it in tomorrow. So don't like be up all night waiting for me to drop it in. I'm not gonna lie, as soon as I'm done with the work, I'm probably gonna go to sleep because I am tired as fuck. It's been a long day.